everyone, and welcome to the Always On Point podcast with Kristen Ambos. So excited to be back in a podcast studio. We are here. So, for those of you wondering where I went, I didn't really leave the podcast platform, but we did try something a little different. I was offered an opportunity to be on the radio for a little while, which was super cool. But what I realized is the radio only goes so far, and this goes farther. And I am incredibly grateful for the amount of people that reached out and said, when are you going to be back on your podcast? And so I just really got to thinking that this is where I need to be. And it's just really exciting. I can't tell you how humbled and grateful I am for it. This is the place where I get to really talk and educate about mortgages, tell you what's going on in the market, where we're at, what we're doing, things to be aware of, and to truly help both real estate agents, those current homeowners, those going to be homeowners in the market and things like that, how to protect yourself. Because the online industry is obviously, we all know, super crazy, right? And it's everywhere. And there's information coming at us at a million miles a minute. And not all of it is accurate. So what I like to do, and one of the things I'm most known for, is just breaking it down to layman's terms, getting it through, because I want you all to be successful homeowners if that's what you want to be. If you don't want to be, that's great. That's okay too. But if you do, some of the things I've learned over all the years of doing this job is, this career is the amount of information that's actually, the whole misinformation, quote unquote, that's out there. And how do you protect yourselves? Because crazy enough, there's still so many predatory lenders out there. In every kind of sales industry, there are always going to be some. But one of the things that I try to focus on is being real, being very clear, communicative, and breaking it down. This is your money. This is your house. This is your house payment. I want you to feel very secure in all aspects of that. And so I want to help educate you on all the options you have, the tools to get you there, and the things that are right for you. And so I'm just glad to be back on this platform and doing this in this beautiful new studio. So I'm glad you're here with me. One of the things that is super important to discuss on a regular basis is where our mortgage rate's at. And so for those of you out there, I like to quote on a general level Mortgage News Daily. They are a great source. They update rates daily. And the one thing I love about them is this is the national averages. So the national average as of today, when we're speaking, is 6.21. So 6.21 is a national average on a 30-year fixed loan. Why do I want to tell you that? Well, there's a lot of rates. If you opened up the internet and you said, what's the lowest mortgage interest rate today? You are going to see a ton of answers, and banks offering 4.5%. I actually just saw a loan officer advertising 3.75 on a 30-year fixed. Okay, you guys, the national average is 6.125, and you're offering far, far, far under the national average. I'm going to assume that comes with a lot of points. That particular client might want to pay 3, 4, 5 percentage points to buy their rate down, if that's even an option for them. Remember, 1 percentage point is equal to one point is equal to 1% of your loan amount. So to make things easy, let's say in the national loan amount average in Wisconsin is about $250,000. So let's say your loan is $250,000. 1 point is $2,500. If you are going to buy 3 points to buy that rate down, that's going to cost you $7,500 in addition to your total closing costs, which are probably somewhere around another $3,000 these days, to be fair. So you're talking about bringing in a minimum of $10,000 to $11,000 of closing costs. If that's something you can afford and you want the lowest rate possible and you want to do that now, that's amazing. We can help offer you that. For 90% of Americans, and that's just a number I pulled out of my head because I do this on a daily basis, so I would be willing to say off of my own book of business, about 90% of the people I work with do not have those extra funds to bring into closing. I'm going to go on a limb and say most Americans do not have that extra money to just throw at a closing, right? And I would then outweigh, is it smarter to put $10,000 more on your loan amount and borrow less over that 30 years? And what's the savings on the rate there? Or is it smarter to pay the points to Fannie Mae, Freddie Mac, your lending company who's buying that rate from Fannie and Freddie for you? And that's what it really is. Is it better to pay them to get a lower interest rate? So these are the things alone that you should be asking. What are my fees? What is this rate really costing me? And what is my return on investment? I am a loan officer that can still pencil sell. I don't need a calculator, and I don't need to have an application to fully tell you if that's worth it or not. That's something that I've done for so long. I can still old school have a conversation with you and determine if that's worth it or not, if you have the funds for that or not. Last night, I was teaching a first-time homebuyer class with a local grant company called NeighborWorks. And there were 15 people in the room, I believe, and not one of them had any of those extra funds to put down. So again, I feel pretty confident in saying that the majority of Americans are doing everything they can to just scrape up their down payment, much less buy interest rates down. So why I'm saying this to circle back around is because if you're online and you think that you're doing research for an interest rate, understand that the majority of those low rates you see are considered bait and switch rates. They're baiting you in to click on their link because they're showing you this shiny, fancy, low interest rate. And then they're going to come in and you're going to get the numbers. In fact, one of the gentlemen last night was like, I talked to my bank and the credit union that I was talking to actually said that they know for a fact I couldn't find a lower interest rate anywhere. And his total closing costs were going to be $23,000 in Wisconsin. I'm here to tell you that the average closing costs right now, total all in, underwriting, processing, credit bureau, appraisal, title, closing with a notary, all of those things are somewhere between $2,800 and $3,200 on average. Every lender is a little bit different fee, but we're all very, very close. So let's just say an average of $3,000 is where your total closing costs are going to be. That means that bank, that credit union was charging him almost $20,000 to buy down the points. He doesn't have that money. That was not an option for him. And instead, they predatorily said, you'll never find a better rate anywhere else. And then told him that if he had his credit pulled anywhere else, his credit score would be negatively affected. These are the two biggest predatory lending things happening in our industry right now. One, you can have your credit pulled by more than one mortgage loan officer to shop without it hurting your score. Because loan officers have to have a credit score in order to properly quote you, the market can't hurt you for that. So you can pull 2 to 3 credit bureaus in a 30-day period and safely feel like your score won't fall. That's one. The second is saying that you can't get a lower rate somewhere else. And I'm also here to tell you that sometimes, as we just determined, $23,000 to close on that lower rate, sometimes the lower rate isn't the most cost effective or financially smart move. Just depends on the person. So with that being said, yes, you want to shop for a rate. You don't want, I've seen people at 8% interest rates being charged points. That's ridiculous. The market never, ever was that bad. Yes, we're rates around 8%, but not also for 2 percentage points. However, I can also tell you that some of your super low interest rates being quoted are coming at a massive expense. And so make sure you know that. So if the national average is 6.25%, and you're getting quoted somewhere around 6.25% for no points, that's a fair rate. You're being quoted correctly. If it's much lower than that, find out what the points are, find out what the closing costs are. And if it's much higher than that, find out why. Are they covering your closing costs? Are they not? Is that something, that's one of the things that people don't often talk about is loan officers saying, especially right now, because right now we're in a little bit of a refi season for the last 3 years of people who bought when their rates were at 7.5%, 8%. Rates are lower than that. So they're refinancing as they should. However, and I'm giggling under my own breath because the amount of loan officers saying that they can do quote unquote free refinances is laughable. No loan officer is writing a personal check to cover your closing costs. They're not paying for your appraisal. They're certainly not paying the municipality recorded at the courthouse. So what does that mean? You are paying for it. You are the borrower who's paying for that. Whether you're paying in it, wrapping it up in your loan amount, meaning you're not coming to close with anything, but you're extending your loan amount to cover those costs. And in turn, what is that going to cost you? Or two, if you're not wrapping it into your loan amount and there's still no closing costs anywhere to be found, you're wrapping it into your interest rate. That's the other secret of how loan officers do it. They charge you a higher interest rate, which then comes with a credit to the borrower, and then you don't have to pay closing costs. Again, how much is that costing you in the long haul? Are your $3,000 closing costs now turning into $30,000 of interest? If that makes sense to you, okay. If that doesn't make any sense to you and that's not what you want, ask. Ask the questions. So that's why I'm here. I'm here to help you find out the questions that you should be asking. If your loan officer can't explain why to you on any of those or talk circles, run so fast and find a new loan officer. There's a lot of good loan officers out there, but there's a lot more predatory lenders that can't do it. There's also a lot of loan officers out there right now who have determined that working harder and longer hours is not for them. Okay, it's not for everybody. But their philosophy now is, I want to make more and work less. If you're out there listening and you are a consumer, that equates to, I'm going to charge the borrower more so I make the same living, but I am working less. I don't want to work as much. And if that's somebody you want to work with, more power to you. To me, personally, I want to work with somebody who's going to give me a fair rate, give me fair fees, be communicative, so I'm not giving up my communication on it, but they're not taking advantage of me because they want to work less. So make sure you have somebody out there helping you on that. The other piece that's so important when you're working with a loan officer team, especially if you're a real estate agent or a home buyer right now, is making sure you can get a hold of your loan officer or their team. So why do I say that? Well, we have a team, a really strong team that works together, and we all have a lot of experience in the industry. We're also do a lot of loans. And I don't say that to brag. I say that because we've earned that over years of systems in place, good communication, treating our borrowers right. Our rates are very fair. Our closing costs are very fair. I'd like to think we are in the lower tier of all of those. I do my due diligence. I right now have a running tally with about 15 to 16 local banks, what their fees are, where their interest rates are, because I do my research, because I want to make sure that I am being as fair as I can be with my clients. Also, communicative. I actually, not long ago, just referred a mortgage to a local bank, and it was a second mortgage. I will be the first one to tell you, can our company do second mortgages? We can. However, local banks and credit unions typically do have lower interest rates and fees on those. So I have a lot of lender partners that I really trust in the industry. And one of them, I was shocked. I called and I referred the second mortgage to them. And it was a quite sizable second mortgage. The response I got was, you called me on my cell phone. Here's my desk phone. Please don't give that out because I don't want anyone to have my cell phone. I was a little taken back by that. Because I'm a loan officer, I work with a lot of real estate agents and I work with a lot of home buyers, first-time home buyers, second home buyers, doesn't matter. And one of the things I hear most from home buyers is, well, I just want to go with my local bank because I bank there, so it's easy. We all have to get the same paperwork. We all have to get the same deals. But if I'm working with a loan officer that won't allow me to call them on nights and weekends when I'm out looking for houses, how am I ever supposed to make sure that I'm as prepared as I possibly can be? I hear that is probably one of the number one complaints from real estate agents, especially on the weekends when my phone's ringing for last minute pre-approvals because they can't get a hold of their current loan officer. They can't get the information they need from their current loan officer because that loan officer went home at 4 o'clock on a Friday and is nowhere to be found until 9 a.m. on Monday. And most transactions, not all, but most, happen when you're buying a home on nights and weekends. Why? Because as a home buyer, you have a full-time job. And as a loan officer, I need you to be working if I want to use all your income. So I need you working during the day and not taking time off because it fits better into my schedule. You have to give me paychecks that show hours. I need you working. That's one. Two, you are working, which means the only time you really have to see houses is on nights and weekends. Ask any real estate agent when they work, and they're going to tell you those are their biggest time frames of working, are nights and weekends. If I'm a real estate agent working with a client and I need to show houses and last minute change an offer or change a pre-approval because I need to put this offer in, I want my loan officer to be able to help me do that. That's one of the ways I built my business. About 15 years ago, I saw a hole in the industry where banks weren't doing that. And I picked up a ton of business because I saw the problem that consumers were having was getting things that they needed done in order to win the house. Having a housing industry that's been tight has been happening since probably it's 2026 now, right? So this would be 2010-ish. So right around after the housing era, right? There were a couple of years where it was a buyer's market. It's shortly switched to a seller's market after that. And we've kind of been in mainly a seller's market since. With the uprising of a massive seller's market, 2020 to about 2024, 2025. I think we would all agree on that as both a consumer, a realtor, and as a loan officer. We're seeing that market even out right now. Negotiations are happening. I want to be there to help you negotiate. So when I started after the 2010 era, probably 2013, I started to really see where clients needed me at a much more night and weekend level. And I decided that that's where our business was going to go. Got my team on board. They understood. They're in it with me. And here we are in 2026. So 13 years later, maybe not 15, but you get what I'm saying. We are still working nights and weekends. We pick up a ton of business. We get offers accepted. I got a text this weekend from an agent that said, hey, the listing agent called me to let me know that she knew that she trusted your pre-approval. There were 11 offers on the table and ours got accepted because of that. Thank you. Those texts never get old to me because I want to be a partner with my buyer and with my real estate agent. We're in this together. And as a consumer, as a buyer, you deserve to have a team that's working on your behalf, right? We're all getting paid to do this. We have nice livings. We make decent money doing this. So I want to make sure I'm giving you every ounce of that time you deserve as a buyer. And unfortunately, there's just not a lot of loan officers out there doing that. So for me, today, it's really important to start this podcast to say, not only do I want to educate you on your mortgage side, but I also want to educate you on how to protect yourself to make sure you're building the best team around you that you can in order to successfully get that accepted offer. Because at the end of the day, if there's a house that we want, we need a team behind us that's going to get that done. Non-dramatic, timely, accurately, getting you to that closing table. And so I feel really grateful because we've got a team that we are very supportive of one another. We get that done. We're here for you. The team that I work with, every one of them is into it as much as I am to make sure when our phones are ringing, it's getting answered or we're calling you right back, that you have all of your questions answered. We would rather you come to us with 5,000 questions and leave the closing table feeling super confident because everybody learns at a different pace than ever walking away wondering why you just closed on that house and what you did. And the other part of where I think our team really shines and something I'm very, very proud of is if you need to sit down and meet me in person, we're going to make that happen. It's been very cool. I've sat down with more clients in the last handful of months than I have in probably the last handful of years. I think COVID changed a lot of that where people just got so used to doing everything online that it happened that way. But I also think during COVID, especially in mortgages, we all became transactional. No one can tell you that they weren't. business was just moving too fast. People were in it to buy homes because they thought that they would never get a home again, right? Rates were extremely low. Refinances were crazy. So very transactional. Not that I wanted it to be, it's just the truth of where business was. I am so glad we are out of that. While it was cool to live it and see it and be in that type of industry and in that market because you just learn a lot, it's also so refreshing to have people coming to us a lot. It doesn't matter. I have helped people who are buying their retirement homes. I've met them in person. And I just met with a couple that were first-time home buyers. They moved here from out of state. They had pre-approvals with 2 other banks. And they were like, we want to give a mortgage company a shot. We want to sit down with one other person. I won that deal. I had just as good of a rate, but it wasn't beating them out. Fees were about the same across all 3 banks, but it was the level of service. They looked at me and they were like, you were the one that was willing to sit down with us. We want to be educated. You took your time. I think we sat together for about an hour and a half, 2 hours. I want you to have that. And so when they left saying, we're definitely using you because we feel so much more confident now sitting down with you and you explaining everything, I show them my computer. I show them the rate sheet. I show them what the charges are. I show them everything. I am as transparent as that can be because it is your money. And it is so important that you know that. The other thing that I really, really love to do is to give our clients options of what loan programs they have. This is what it looks like at this down payment. This is what it looks like at this down payment, and showing people, listen, maybe instead of doing, let's just say 20% down, I can get you a 0.5% better interest rate if you put 25% down. Can you do that? If they can't, that's okay. They still feel empowered because they know their options and they made that choice for themselves. Some want to, some don't. Truth be told, 5% down interest rates are the same as 20% down interest rates. So is it smarter to put 5 or 10% down and keep the rest of your money to do updates to the house you're looking at, or buy that new furniture and appliances without putting it on a credit card because you just spent all your money? It might be. Let's talk about it. Let's talk about what that investment is. The other piece of what I love to talk about with clients is PMI. PMI is one of those conversations that I think is so funny because I'm up against it with a client right now who is adamant they despise PMI, never want to pay PMI ever, ever, ever in the history of ever. They don't have a lot of down payment. PMI was put into place so that people without 20% down can purchase. PMI is really a good factor. No, we don't love to pay it, but without private mortgage insurance companies stepping in and ensuring lenders that they won't fold on people or foreclose on people, the people won't foreclose, if you will, they won't stop paying their bills because they can't afford it. Private mortgage insurance companies give lenders like myself the trust that even if you don't have a lot of money down, I'm still going to be made whole if this loan defaults. That helps me lend. That gives me options. So PMI not only helps keep your interest rates low when you don't have 20% down, but it also helps you buy without 20% down. And now I could show you how if you rent for the next 5 years, will you save 20% down? Or how you buying now with 5% down looks in 20 years and where your wealth is. I'm sorry, 5 years, not 20% down. Where your wealth creation is, you're going to be mind blown of how that PMI works for you. And PMI is not always super expensive. People are typically blown away when I'm like, okay, instead of putting 20% down, let's put 10% down. You are going to go into PMI insurance. This is how much your payment changes. And they're like, oh, $50? Yeah, sometimes. What could I do with that $50 a month? Well, I could do a lot of things. I could pay off other debts that cost more than that. I could now, like we said, not finance furniture and appliances that I need for $50 a month in my mortgage. Work with somebody who's actually going to take the time to go with you through all of that. And that's the things that help educate you. And that's where you now are empowered to make the best decision for you. As a buyer, the first question I get is, what's your interest rate today, Kristen? And my answer is always going to be, I'm going to need an application because I want to tailor it to you. I could throw at a rate that would be phenomenal and you guys would love it, but that's not truly what it's going to be. And any loan officer that's just going to throw out a rate is probably giving you the lowest rate possible and they will switch it later because that's what they do. And a lot of times it's just that the consumer doesn't know another question to ask. They just think, hey, if I can get the lowest rate, that's where I'm going to go. But again, remember, the lowest rate doesn't always equal a better savings. So sit down, talk to your loan officer, go through with that. I'm happy to do that. I would be honored to. I look at anyone who wants to educate themselves. I got a client right now, and I'm just bringing these examples to you because I think they're real life. And he legit is so interested to understand every step of our process. So I met with him. We got the loan started. We're clear to close in less than 2 weeks with an appraisal, you guys. 5% down. No joke. It can happen fast. But here's why. I educated him up front, got him everything he needs, stayed in communication. Then my processor got to it. He wanted to understand, okay, as a processor, now what does it mean to go to underwriting? Now, okay, we got the approval back. What are conditions and why do I need to get them to you? Kimberly on our team, processor, took the time, talked it through, super appreciative. The appraisal came in. He talked to Nicole on the appraisal. He's super excited. The value came in. It came in a little over what he was like. We talked about it when I met with him. What does it look like if the appraisal comes in low? What does it look like if it comes in high? So he knew what to expect through every part of the process. So then Nicole talked to him about that. Now he's clear to close. He's talked to each person on my team. He has educated himself and he is beyond ecstatic. This is the same gentleman that worked with 2 other banks that didn't get that same treatment. We held his hand through the whole process, not because we felt like we had to, but because he wanted that. He wanted that education. And we all looked at each other like, this is a breath of fresh air, being able to truly educate people. Some people don't want that. You're always going to have your one-offs that know it all. That's fine too. But at the end of the day, if you want to understand what your mortgage is and how you can make it work for you to build your wealth, our team is here for that. So with that being said, I'm going to wrap this up because I'm sure you're all sick of listening to me keep chatting on, but drop your questions in, reach out to me, send them on over. You can text me. You can email me at kambos@pointmtg.com. My contact information is just about anywhere. You can Google Kristen Ambos at Point Mortgage. You'll find it there. Reach out, ask the questions. We want to answer them. And this show is all about making sure we're educating and empowering you to make the best decisions you can in either your business or your home purchase. So thank you so much for being with us. Again, this is Kristen Ambos with Point Mortgage, the Always On Point podcast. We'll see you later.